Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Today we have Leo Anzoleaga. I actually think I got that one right.
You did.
Leo is from Draper and Kramer Mortgage Company. And so we are here to talk about mortgages, interest rates, all the things that is on top of people's mind today in this economy and Ukraine, all that craziness. So Leo, thank you very much for hopping on the show today.
Hey, thanks so much for having me, Gabe. I appreciate it. You have an amazing audience, amazing podcast, and I'm honored to be here.
Absolutely. I told you before we got here, we always start with stories. We just like to hear how people kind of got from, the beginnings to where you are now. So real quickly, can you go into your story? How'd you get started in real estate in the first place?
Yeah, I always tell people that in real estate, most people don't dream of this. Ironically enough, I wanted to be an engineer. And so, but right out of high school, going into college, one of my friends, got into the mortgage business and said, "Hey, I think you do really well at this." If I'm honest with you, at first it sounded like a pyramid scheme, so I was not interested. But then he told me that he invested in one of his first properties, and I literally looked at him and I was like, "I mean, how are you doing this? You're 19. Is this legal? You know what I mean?" And so that was in 2003, and grew my business, brick by brick. Then obviously the liquidity crisis hit in 2007 and 8, so you kind of had to readjust. And continue building. And so I've been doing this for 19 years. I mean, I look like a kid on video here, but I've been doing this for 19 years.
I'm impressed, actually.
Yeah, man. Yeah, it's been a while. So I've been fortunate enough to be, with some amazing companies over the years, and now, serve, in the DC metropolitan area where the majority of my business is done.
Cool. I love it. So you are an OG veteran of the mortgage business, which is great. Because that is, mortgages, interest rates, that is what is top of mind with most people today, because, we're in this uncertain time. The war with Ukraine is going on. And so kind of tell us, why don't we just start there? What do you see? This is a very loaded question, so you can take it however you want it. But what do you see in the next 1 to 2 years when it comes with, let's start with just interest rates, and then we can go into the market and all that stuff.
Yeah, I mean, you kind of nailed it, right? I think I would argue the last, 2.5 years since the pandemic started, it's been a very interesting, study, to say the least. Before the pandemic in 2020, we started to see a lot of movement in the marketplace. A lot of that had to do with first-time home buyers, entering the marketplace for the very first time. So I would love to kind of start there, because that's going to give us a little bit of context. So in the 1980s, there was a boom of births that happened, and all of those people, think about it, right? I mean, I'm 38, going to 39 this year, so a couple younger version of me, essentially, are starting to enter the marketplace for the very first time. And that created a lot of inventory pressure in the market. And even before the pandemic, you add the pandemic, right, where, rates came down to the low 2s, right? And that was a recipe for, shortage of inventories. Competition left and right. I'm assuming a lot of your investors are obviously feeling that. Just left and right. It was a refi boom for about 1.5 years or so. And so that, started to kind of, taper down and go away at the beginning of 2021, specifically February. The rule, the vaccine rolling out played a role in that. And then, inflation, which is kind of the hot topic, right? Inflation pressures have been an issue that the Feds have been trying to kind of get their arms around, right? And so around September or so of last year, we started to see rates kind of take, a very, very sharp turn, and shot up. We're, closer to that 4% mark, currently right now. Now, then you add, tensions abroad with Ukraine. I think context is important here, because for as interesting as, the secondary market has been over the last, whatever, month and a half, there are lives out there that are being affected, millions of people that are, having to flee Ukraine, go into different countries. And hopefully, knock on wood, this thing won't escalate beyond that. So in context, what we're experiencing on the secondary market, the volatility means nothing, right? Compared to the lives of these people that have been affected. But certainly, rates have, came down a little bit when, Russia invaded for the first time, and it started a ripple effect that I think, we're gonna digest, for the next few months. In terms of,
you said rates came down.
Yeah, they did.
Really? Is kind of contrary to what I would expect to happen in that situation.
Yeah. So I think Aaron, you did a podcast with Aaron Chapman. He actually explained how rates in general work. And so if I can just kind of piggyback on that, a lot of people think that interest rates are actually determined by how banks compete for business, but that's not the case. Rates are driven primarily by how mortgage-backed securities trade. And so here's kind of the rule. If there's a buying pressure on these bonds, then interest rates come down. If there's a selling pressure on these bonds, then interest rates go up. So however these instruments perform on any given day, that's what's going to drive the overall pricing for interest rates. Now, there's an inverse relationship between how bonds and the stock market trades, right? So if the stock market is losing ground, then that money is going into a safer investment called flight to safety to bonds. And so Russia invaded Ukraine, stock market, the secondary market freaked out, money came out of stocks, moved over to bonds, and rates came back down. Now, that was short-lived, it was for a few days or so, and inflation pressure kind of took over again. So, but no, yeah, that's the reason why interest rates came back down for about I want to say about 4 or 5 days or so.
Huh. That is interesting. You learn something new every day. It was so interesting. I forgot what I was going to ask next.
You're good, man.
That's where I was going. So interest rates came down at the beginning of the war, but that doesn't mean that they'll stay there. We've heard all this talks about just runaway inflation is just around the corner. Yeah. So where we are today, interest rates, I don't know specifically where they are, but they're probably around the 4 mark. Is that correct?
High threes. Yeah. Mm-hmm.
So what do you see? I had somebody on this episode or on this podcast earlier who said he was, getting mortgages in the 80s and 90s, and interest rates reached, I think he said 18%, which is absolutely crazy. Yep. It would destroy pretty much every investment. Well, not every, but most investments I've made. If I had to deal with an 18% loan, it just wouldn't pencil. It wouldn't make sense.
Right.
So where do you see interest rates going in the next? Interest rates in the market in the next 2 years? Do you see that spike that happened in the 90s? It doesn't have to be exactly like that, but do you see it going past 6-8% interest?
Great question. So I think where do I see interest rates go in the next few years? I think we have to have context first, right? So whoever, I think you're talking about Aaron, but that's the person you interviewed, I think one of your episodes. For us to have context when it comes to rates, it's extremely important. So before the liquidity crisis in 2006, rates were hovering around the 6% mark, high fives, low sixes. Okay. Liquidity crisis hits, we're now down into the low fives. We keep going, right? QE, right? Quantitative easing happens, we're now down in the 4s, right? We're hovering there for a while. Pandemic comes, rates come back down to the low 2s, right? And so for us to be anywhere in that 4% mark, I think it's still an anomaly, right? When you compare it historically, over the last 30 years, whatever, right?
Gotcha. Okay.
But what I think will happen in the next, 2 years or so, it's actually an interesting study. So one, I do believe that rates will get to the high 4s by the end of the third quarter of this year. The Fed's increasing the Fed funds rate on March 16th. They've already hinted that they're going to increase it by about a quarter or so. There's a lot of uncertainty still, with inflation, right? So inflation is the arch enemy of bonds, right? So again, rates are driven by how these mortgage-backed securities bonds are being traded. So if there's a sell-off on these bonds, the yield or the return has to go up, right? So I think we're going to continue to see that come down, and rates are going to continue to go up. But I think that we're going to have a recession here in the next year or so. And what that's going to do is essentially bring rates back down, right? So like the economy is slowing down. And I really do believe that in the next, I can't say for sure when.
Right. Nobody else
really don't know, right? Until you look back, right?
Yeah.
But I really do think that we're going to see at some point in the future rates come back down. How much?
Interesting.
You know, it's hard to say, but everyone I follow and everyone I read and everything I see, kind of seems to suggest that. And now, what does that mean for us? Investing in real estate, first-time home buyers, move-up buyers, et cetera. Well, prices are going to continue to go up. You know what I mean? Like, so demand will continue because interest rates will come back down. So I think the next 2 years or so, you're going to see rates go up. And then right around the end of the year, beginning of next year, we're probably going to see, kind of a swing to the other side as well. So that's kind of a short answer to your question.
Yeah. So one thing that kind of stuck out in my mind with everything you just said there is it historically 4% interest it's historically low. And, I'll be the first to admit that I do not know a lot about, mortgage rates and all that stuff. I'm more of an operator than I am the technical side of mortgages. So historically, what is like an average interest rate that you would, I guess it's hard to put an average over hundreds of years, but what is an average interest rate that you would see in the 19th century, 20th century?
Yeah.
Sorry.
I would say 8%.
8%, really?
Yeah.
Wow.
Double digits back in the 80s, right? But think about that, right? Like, people were still investing in real estate. People were still buying houses, right?
Yeah.
Like you said, you made a comment earlier, and I think it's interesting because a lot of people actually think about this as well. Yeah, your returns, the ROI is extremely important when you invest in real estate, right? Like, but people are still gonna need a place to live, right? Buying real estate is still the greatest hedge against inflation, right? So when you look at prices in the 80s, certainly we haven't seen the type of appreciation that we've seen over the last 2 years, right? But people were still investing in real estate. So it's so interesting to me when we talk to our buyers and they're like, oh my gosh, rates are like at high threes. What are we going to do? Like, like we need to get this thing down. I'm like, Mr. Buyer, like that's still an anomaly, right? Like, well, what if rates come back down in the future? Well, we'll have an opportunity to restructure this debt in the future. Take the gains now. Let's not get greedy because later down the road, we'll be able to restructure the debt. I think context is everything when it comes to rates.
Yeah, absolutely. That is very interesting. 8% is actually higher than I had expected. But that's good. It makes you appreciate where we are today, and hopefully it won't change too much in the future for all of us investors out there who are banking on not paying too much to the bank in our interest rates.
Absolutely.
So I just took a peek at the clock. It looks like we are rounding the corner. So before we move there, I do have to ask, what is one piece of advice you would give an investor, commercial or real estate, out there in terms of mortgages for the near future?
Yeah, I think, you touched a lot on this in your previous podcast. And I think, a lot of people say, well, when is the right time to invest? When is the right time to buy? When is the right time to get into this market? And I always say this to everyone, whether it's first-time home buyers, move-up buyers, investors, you buy a place or you get into the market when you're ready to do this. Okay, so how are you going to know that you're ready? Well, as a first-time home buyer, you're going to know when the walls around you start to kind of cave in, right? And you start to see the rents go up every year, and you start to calculate how much you spend, right? For a move-up buyer, it's like, hey, we need more space, right? Your lifestyle has changed, right? You have now a growing family. For investors, just opportunity and philosophy, right? And so that's the first piece. The second piece is you just have to align yourself with professionals, that know what they're doing, right? Like whether that is a mortgage professional like us, or other people that you had on your show that understand like the pain points, understand how to navigate through some of the questions, but also even like real estate agents, right? People that, that are representing you when they're, when you're purchasing these properties, right? I know that you do a lot of wholesaling. That's part of the, the model that you teach, but, aligning yourself with the correct people, because ultimately, like, you win as a tribe, and you have to have the right people in your corner. And I think those are the two pieces of advice that I would give the people that are actually looking to invest in real estate.
Yep, absolutely. I always say before you get into real estate investing, you should find a good mentor and you should find a good team, because you're absolutely right. The people that you work with, the team makes the dream work, and that is true in real estate, period. So I like that advice, and that leads us to the quick question round. Are you ready?
I'm ready, man. Get it.
Oh, all right. We always start out with books because I'm a big bookie. So why don't you give me 2 book recommendations, one for general life wisdom and one for real estate specific. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com. So if you are interested, head on over there. With that said, let's get back to the podcast.
Wow. Okay, that's a good one. Real estate specific. Okay, there's a great book called The One Thing by Gary Keller. I think it really will help you understand the domino effect. A lot of people want to tackle everything in life at the same time, and that's not how momentum happens. You got to take it one piece at a time. Wisdom in general, obviously the scriptures are great. I mean, that's my background. That's probably the only answer I have right at the top of the dome.
That is a good recommendation. All the scriptures they have great wisdom in there. And I read The One Thing. It is a good, I could sum it up actually for anybody who doesn't want to read it. It's just focus on one thing. If you focus on the one thing that matters the most, you're going to see the movement. And I can attest to that in my own life. So that is a really good recommendation as well.
Yeah. Good.
Leads us to a next question. And that is for your younger self. So if you could go to the Leo who, way back when you're 19 years old, saw your friend who is crushing it in the mortgage game. Go back to him, look him in the eye, give him one piece of advice moving forward.
Yeah. I say this to my kids. I say this to my friends. It sounds cheesy, but leaders are readers, right? And I feel like, when I was in high school, when I was like, my younger version, maybe 16, 14, 15, I hated reading. And I got to give a shout out to a friend of mine who gave me the secret of reading. She literally said to me, she's like, Leo, when you read, there's a secret. And I was like, what is that? She's like, well, picture the person that you want to have an interview with. Let me put it this way. She said, let's say that I can arrange an interview with anyone in the world for 15 minutes. Who would that person be? So I was like, Jeff Bezos, right? Like, okay, great. What would you ask him? I will ask him this. What would you say to him? I would say him this. Okay. She's like, pay attention. That's what reading is all about. She's like, you grab a book of things that you're interested in, and you will essentially sit down with that person for 15 to 20 minutes every week, every day, however long you want, and ask the questions you want to ask. And so had I known that earlier, right, in my career, I think I would have been more ahead than where I am now. But I say that to my friends. I say that to my kids. I say that to everyone I meet. I was like, reading is the greatest gift that we have. And let's hope the libraries don't go away, because it's one of the greatest tools that we have to learn.
I like that. That's good. That's a good perspective. Is when you're reading, you're sitting down with the person who wrote the book. Yeah. And that's great because it means there are so many good leaders out there who are just sharing their wisdom. And I echo that sentiment as well. I'm a big reader, although recently I haven't read as much as I would have liked. Sometimes life just gets in the way, but good advice. Moves us on to the next question. And that is the United States investing, because there are so many square miles out there to put your hard-earned dollars. It means there's a lot of opportunities. So what metro are you most excited about in the coming future?
Yeah, I mean, I think you invest where you know first, right? And that's kind of like a principle that you've talked about in your previous podcast, right? I don't know Ohio. I don't know, I don't know Cincinnati, right? I don't know some of those markets. I know DC. I know the DC metropolitan area. And I would say that's where you start. You start with where you know. You go and you fish in your fishing pond first. understand the ropes, get a good mentor, surround yourself with good people, not people that are going to sell you a dream, right? And you start in your backyard. So I would say for me, that's the DC market.
Boom. I'll leave it there. Start in your backyard. All right, next question. This one is for an opportunity for you to brag a little bit, because we all have strengths. We are all gifted with something that we specifically can offer this world. So if you could point to one thing that you feel you are exceptional at, what would that thing be?
Yeah, it's great. I'm actually ready for that one. So one of my favorite TED Talks of all time is Simon Sinek's called Start With Why, right? And I love this. He always says, like, most people talk about the what, they don't talk about the why. And for years, I've been developing this. And here's my why. My why is 3 words: impact, inspire, and connect. Right? I want to impact. Impact is an acronym for me, and that's I must personally act. I must personally act to make an impact in my area and with my friends and those around me. I want to inspire people to see beyond what they see, and I want to connect them to things that matter. Well, the second circle of that is, how do you plan on doing that? Well, I plan on doing that by teaching people how. I built a curriculum. I've helped agents, people in real estate, literally grow their businesses from sometimes 0 to like 50, 60 million a year, right? And I literally have helped them answer the most pressing question, and that is how. How do I do this? How do I get started? How do I grow? How do I execute on a very high level? And here's the secret. It's all tied to books that I've read, okay? Implementation, execution is the secret in life. The last one is what? What do you do? Well, I just happen to be in the mortgage business, right? And I happen to be a business leader and an influencer. So that's kind of the bragging section of what makes me unique.
Nope, I love it. That is the gift that you give to the world, and we are happy for that. So we appreciate your gift. And that leads us to the very absolute last question. And this one is for the listeners, because you've given us so much good advice, so much good wisdom. I'm sure people out there want to reach out and say hi. So what is the best way for them to do that?
Yeah, I mean, email leo@dkmortgage.com. That's leo@dkmortgage.com, or follow me on social media. Leo Anzoleaga Group is my Instagram handle, @Leo Anzoleaga Group.
And I'm going to spell that one out for everybody, because that's kind of a hard one. So it's Anzoleaga is how you spell out Anzoleaga.
That's true.
All right, Leo, thank you very much for hopping on the podcast. It's been an absolute pleasure talking with you.
Yeah, you too, man. Thank you for having me.
All right. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. Other than that, as always, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started, or an established investor looking to take your business to the next level, I've created an ebook just for you, available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.